Good morning. My name is Bruce Dines. I am with a publicly traded company in Denver called Liberty Global. We're a large international cable operator with a number of other digital assets around the globe. And I serve two roles with Liberty Global. One is running the technology investing for our corporate venture arm. And in that regard, I'm really seeking external innovation solutions platforms that I can bring into our company and also take an investment position in. The second role I play, I head up what we call our Office of Innovation. Innovation is happening external to companies all the time, but it's also important to drive innovation internally. And in that regard, I am focused on bringing innovation best practices and developments and driving those across all the operating units within our company. I'm delighted today to be on this panel, and I'll start by introducing Kamran Elahian. Kamran needs no introduction. He's one of the most highly regarded entrepreneurs in Silicon Valley, having founded 10 companies over a 20-year career as an entrepreneur. He subsequently founded a venture capital firm, Global Catalyst Partners, which is investing in early stage companies globally. Next to Kamran is Steve Brotman. Steve is an entrepreneur in his own right. He was the recipient of the Ernst & Young Entrepreneur of the Year Award in a prior life, and subsequently founded Greenhill SAVP, which is the venture arm of the investment bank Greenhill, headquartered in New York, also focusing on seed stage and early stage investing. Next to Steve is Tara Lemmey. Tara chairs Lens Ventures. Lens is a very interesting firm, focused 4 to 7 years out and really have a market pull model. They are actually going out and driving innovation and invention that hasn't currently even been conceptualized. So doing almost business creation. Tara is also a thought leader in the security space. She serves on a panel, and one of the themes here at the conference that's emerged has been cybersecurity, this issue of bot wars, and all the problems that's creating globally on the internet. Lastly, I'll introduce Victor Perton. Victor is Commissioner to the Americas for the state of Victoria in Australia. Liberty Global has a substantial investment in a company called OSTAR, which is headquartered in Melbourne, the capital of Victoria. And with that, I'll jump in, and Tara, perhaps start with you. I'd love to have you share with the audience some of the information that you're gleaning around this whole issue of cybersecurity.
Sure. The work that we've been involved with on cyber is I co-chair the technology side of the Markle Task Force on National Security. And we worked a lot on redesigning the infrastructure for intelligence post 9/11. And cyber keeps coming up clearly as an issue. One of the most interesting things that we found about cyber is that it's very challenging for entrepreneurial approaches to happen. So our colleagues here who are in bigger firms certainly have been involved. But when we've seen a few startups take it on and really have some success, the guys with guns show up at their houses, literally, and threaten their families.
So you're saying that behind the bots are actually mafia style?
There are folks behind the bots with guns. And it's created this really interesting challenge because you want to bring fresh ideas, different approaches, creative ways of doing it, a venture-style approach to dealing with it. And at the same time, it's a little bit difficult because they don't have enough shielding on it. So we're seeing this contradiction in sort of how to approach some of those problems. And it's not clear exactly how to pull that off. And it's not easy for an entrepreneur. You think it's bad when the venture capital shows up and says, you have to do something, but when the guy with the gun shows up at your door and says, hey, we really want you to stop that. I've gotten more than one phone call from venture colleagues of mine saying our companies have been threatened. Who should we talk to within the government?
Wow. Well, on that note, Victor, let me toss a question.
If you're thinking about investing in cyber, you might want to talk to the DoD first.
Victor, I'll toss a question your way. As I understand it, Victoria is really positioning itself to be a market leader in biosciences, and that's certainly a huge trend in global investing.
We've been very fortunate. It's really 30 years of development by government, the private sector, and the biotech sector in Victoria and Melbourne goes from CSL, which is of course a very large global player, to some of the most interesting startups. And Richard, Florida rates us as number 5 out of 275 cities for creatives. And we've been fortunate. So Alan Trounson, for instance, who now heads up the Californian Stem Cell Initiative, was involved in the first frozen IVF baby. The first stem cell to be converted to a neural cell was done in Melbourne. And now, for instance, the investment's being driven by companies like IBM, who are building the largest supercomputer in life sciences in Melbourne. So, 22,000 researchers, a city that really welcomes innovation, it draws investment. And so we're seeing a great flow of investment. And I'm now 50. I think when I first started coming to America at 25, we came here looking for funds. And one of the most interesting changes in my job has been the flow of American venture firms to Melbourne, not just to look for investment, but to actually raise money. To pick up that, the shortage, for instance, in venture funds that is a global phenomenon. One of the interesting and perverse things that I've seen in my work is venture funds from here raising money, coming back here and investing in Australian firms in the Valley. So to pick up that trend, we've actually established a small incubator in the Valley for Victorian firms to come and really suck it and see, because of course, I think there is nothing like the Valley for both mentoring innovators and financing them. So for us, it's interesting. There's a lot of investment flow into Victoria, not just in biotech, but for instance in advanced composites. But we also recognise these weaknesses in capital markets, so we're prepared to go where the people are prepared to invest.
Well, given the fact that Australia managed to escape the GFC, I imagine that trend is something that will continue.
It's really interesting. We've actually just had a new federal budget which has tried to slow down the rate of investment in the mining sector. It's really heating up the economy. We've had 5 interest rate rises this year. So it says something about the strength of the economy. 4% economic growth, 5% unemployment. What's really interesting is that every other recession, we've followed the US. Whether it's 2 months later or 3 months later, same movement in GDP. This time around, it didn't happen. And it's because it's become a diverse economy that values innovation. And Mark Anderson was there last year for the Australian-American Leadership Dialogue. And I think he summarised it very well. The innovation culture was built out of the isolation. We were, the land down under, isolated. Today we're in the Asian time zone, and we've got the rule of law. So it's a really, strong combination.
Right. Well, Kamran, I'd be interested personally, and I'm sure the audience is as well, to hear more about what trends, what innovations are you investing in today? What are you seeing, given your investment thesis?
Sure. Well, first of all, every year I challenge you. I get the default best-looking pair of legs in this conference. What's wrong with you guys? I like to see a few more of us show our legs and compete with me, okay? I'm tired of getting the award every year.
I almost wore a dress.
You should have. But talking about the trends, as we all know, the venture capital has been quite under pressure. If you look at the number of people who have been in venture capital in 2000, roughly it was estimated to be over 10,000 people. Now, I saw some of the figures, it has been reduced to about 5,000. So it is an industry that has been shrinking, and it has been under quite a bit of pressure because of, I guess, a lack of results. The IPO market, which has been the fuel that has created a lot of cash flow and money, has been non-existent. But thank God, this year it looks like it is different. And I believe in March there were about 5 high-tech IPOs, and in April the number increased quite a bit, over 15 if I'm not mistaken. So we do see that the window has opened up for exits. Our own firm has been investing, I've been 10 years, I guess, in this business now. And we had, between our 3 funds, $300 million that we kept investing and investing and investing. And finally, we are in a position that hopefully we will have our first company having IPO next month, and a couple more in the pipeline to come Q3, Q4 of this year, assuming the markets hold up. But looking at how difficult it has been, the first company that is hopefully will be coming out, we have put over 140 million collectively. Our firm has put 18 million. Other venture firms, the rest, 140 million, 7 years of continuous investment from day one to get this new 4th generation 4G technology coming up and becoming a reality. And I'm sure you have seen some of the ads that Sprint and Clearwire have been pushing in US for 4G. Our other company that will come later on has taken over 120 million, and it's 10 years old. So these have been requiring a huge amount of patience, continuous investment. Don't lose your nerves, and stay with it. And the basic old model of venture capital was the way we have been doing these things. Have confidence, see where the future is going, and put money into it and take risks. Due to the fact that a lot of companies were not successful and venture funds have shrunk, a lot of these basic principles of venture capital and risk-taking have been under pressure, and you see many alternative business models have appeared that does not say you have to invest these kinds of methods. We have stayed, I guess, with our principles. We continue to invest in the markets that we really like, which is fundamentally communications and mobility. We see as a social value of this as you make investment in making internet being faster, better, broadband being more available, or mobile devices coming along, you are making the whole world come together. And more we have channels of communication open and people have access to internet at low prices all over the world, hopefully we learn from each other, we understand each other, we cooperate, good ideas spread, and we would have fewer wars. So that is the overall big goal that I've always followed, and I've convinced my partners in our venture firm to follow this, and we continue on that.
Great, thank you. And Steve, you're also doing early stage investing. Kamran, as I understand it from our conversations earlier, your real focus in the businesses that you elect to invest in is that they have to have some kind of very deep technology.
Yes. Very much so.
And that's kind of your risk mitigation strategy. They're highly differentiated. It's hard to recreate or repeat what they're doing. Steve, I think you've got a contrasting investment style, but also focused on early stage. Why don't you share with our audience a little bit more about what you're focused on?
Sure. It's actually not you know, there are lots of ways to make money in the world. I don't think I need to tell anyone here that. But we're based in New York, and so we see the world a little bit differently than Silicon Valley does. We see a world where core technology and IP-based technology is commoditizing very quickly, especially in technology, and asymptotically going to zero in terms of effective cost or in terms of the value stack of a product. To give you an example of historical examples of technology commoditizing, it used to be high tech if you were a radio engineer, if you were a television manufacturer, if you were a cable company. That 20 years ago, 30 years ago, that was high tech. And over time, where the biggest opportunities have been with, say, electricity, hasn't been in the manufacture of electricity or the manufacture of cable or the manufacture of the television sets, frankly. It's what rides on top of that infrastructure. Well, 95% plus of the value. It doesn't mean that the creation of that core technology won't generate tremendous returns. It just requires a lot of capital, as Kamran points out. And in today's world of less capital, capital scarcity, that means you have to be much more capital efficient with your dollars. The other aspect, as Mark Anderson pointed out earlier today, is that IP protection is eroding dramatically, so that the protections that we have around IP that are truly protected from outside competition is slowly eroding, and that creates some problems for investing in that sector, but it also means that dollars are going to shift towards other models that are not IP dependent, if you will. So we actually focus on industries that are in transition, that are being dramatically impacted by the internet. And up on this slide here are 7 industries, from media and advertising, financial services, publishing, information services, pharmaceutical, healthcare, retail, mobile, real estate. All these industries are under massive, massive change and assault, primarily driven by the internet technologies that are sprouting up. So what we focus on is how do you fix these broken processes with the existing IP that's already out there. We already have the technology to fix many, many of these problems and address some of the issues that these industries have. It's really about finding a domain expert, an entrepreneur that understands these industries and can apply the technology that's taken decades to create and apply that to solving these problems, both business and consumer. And that's what we focus on at my fund. To give you an example, one of our companies which went public last year is called Metadata Solutions. And the pharmaceutical industry has a pretty big problem. It takes them 7 years and $400 million to create a drug from soup to nuts. So what Metadata did, starting about 8 years ago, was reduce that clinical trial cycle by over a year. And how'd they do it? They applied information technology to gather up data electronically and create a digital process instead of an analog process. Before, doctors would write the findings down in clinical trials on paper. That would be photocopied and put into a file. That file would be put into a truck. That truck would be sent to the company. That company would then compile it, rekey all the data in, send that to the FDA. FDA would take a year looking at the data. And by the way, the data is over a year old now, and a good portion of that data was erroneous because it's hard to read that handwriting. And so what Metadata did by digitizing the process is they took a year out of that process by digitizing it and released, for every drug that you save a year, a hit drug, would be between $1 and $8 billion, you're actually creating $1 to $8 billion of value for that pharmaceutical company. There are 10,000 clinical trials done every year. It costs $300,000 for a metadata solution to be implemented, wildly unleash an incredible amount of value. Now, it's not going to be the next Google necessarily. Metadata is a public company, several $100 million. It's great from a venture perspective to invest at the low single-digit values and exit at the several $100 million values. And that's what we do in our fund, is we focus on these industries that are in transition, that require relatively small amounts of money. Now, Kamran was talking about investing $140 million into a company and growing it over time. These types of companies require about 20 million to get to break even, maybe 10 million to really show, 5 to 10 million to show some real progress and trajectory. And so they're much more capital efficient models. And the good news for places like Australia and regions like New York and places outside of Silicon Valley is that this commoditization of technology is going to unleash a huge tidal wave of venture capital as venture and early stage investing becomes truly democratized, because then it's no longer dependent on IP, which is in which Silicon Valley and Boston, Route 28 have some definitive advantages. So for instance, in Australia, mining and mining technologies and things of that nature, IT and these types of opportunities will pop up. In New York, obviously, media and advertising and publishing and financial services, that's where a third of that industry is worldwide. That's in New York. So we have investments in Atlanta, in Austin, that take advantage of opportunities in that region and apply IT to solve broken business processes.
I think what's interesting is you've gone global too. I mean, you just this year acquired an Australian arm.
That's correct. Yeah, absolutely.
Camera.
Bruce, I guess while I agree with you, there are many different ways you can make money. What has really been traditionally the creator of mega trends has been creation of deep, innovative new technologies. If you look at I guess a good way as a mega model of the world of innovation, you can look at this pyramid that at the bottom, you do everything by hand. The next level of innovation is you do it using mechanical machines. The next level is you use electromechanical. Next level, you get to electronics and microelectronics. And then the next level is software, and the next level is content. And you can do innovative, creative things at each one of these. And the whole world you can apply in every sector of our lives. There is a transformation from doing things manually to mechanical to electromechanical to electronics, microelectronics, software, content. You will see it all over. At each level, there is significant amount of innovation that you could do, which is the model that we like to zero in, specifically at the level of microelectronics, software, and content. Those are the things that significant values can be created. And if you make solid companies, when you have exits are not at 50 million or 100 or 200, 300 million. They end up to be multi-billion-dollar type of exits. The 10 companies that I started, 3 of them had IPOs and 2 of them were multi-billion dollars. And that's the way you create significant innovation that empowers many, many other things happen. One of my companies, Centurion Communications, was the pioneer on DSL. And look at the effect that DSL has had. This company that I mentioned next month owns 70% of the 4G chips. And we all know that 4G is coming. First we had 2G, 2.5G, 3G. One doesn't need to be Einstein to know 4G is going to be huge. And having the significant effect in there, innovating, making it happen. And if you do your job right, you make 4G.0 first, and then you do 4G.1 and obsolete your previous version, and you stay on the forefront of that. Yesterday, you listened to a wonderful CEO of NVIDIA, how Jensen, year after year after year, his products have obsoleted the last year's thing, and that's how you create significant companies with staying power to move forward.
Mm-hmm. Tara.
So the conversation concerns me a little bit. I come from the go big or go home school. So, I think that the incremental innovation or the sort of innovation investment in taking existing technologies and changing industries may be a better place for us to start to spend our SBA dollars or loan dollars to go in and turn those around, as opposed to risk capital. Because I chair the department, one of the departments at Singularity University, which is the Google, NASA, Peter Diamandis, Ray Kurzweil exponential technologies. And one of the things that we're seeing a lot of is when you're looking at medicine and biotech and robotics and space and other things coming together, IT is only a small part of the solution. And a lot of the investment community has become so IT focused that, and wants short-term wins on not too big of an investment, that we're not spending the real dollars on go big or go home change, the kind of change that we really want to be seeing coming out of the US. And so if we put money in risk capital, let's really take a risk. Now, I appreciate your business model. I totally appreciate it. However, I think it may be time to rethink that a little bit.
I appreciate your government-centric perspective.
I'm not from the government, I'm from the valley.
Well, the SBA, right? The SBA is a government program. And
it can be a private bank. I think that's a loan against something that there's going to be a return as opposed to an investment in risk capital.
Half of all VCs went home last year.
That's good. They weren't very good at it.
So they weren't good. Guess what? The next half are going home again next year. So while you can say, hey, we really should be, where I'm raising money from LPs and they care about returns. They don't give a shit, excuse my language, about cultural or social change. They care about return on dollars. And those VCs who went after go big or go home opportunities are at the bottom of the ocean right now. And there's another 50% that's going to the bottom of the ocean unless we fix some of the problems that Mark talked about in terms of protecting IP. So I'm here to tell you that the opportunities are democratizing, growing outside of the valley. You can either go big or go home, but the opportunities are gravitating outside of the valley because they're riding on the technologies that you guys are creating.
But if you're the CEO
and it's a
of
phenomenal
one of those
opportunity.
existing industries, perhaps you should spend the money, you can spend the money, cut the money from a different way and take advantage of it. And just for those of us who spend their life in risk capital, I think we should start to take a look at Cameron's point of view about there are
saying that I don't risk capital
very big changes.
But saying what I'm doing is
the globally. I mean,
right.
You go to Brazil now. American companies are selling off their licensing in Brazil, floating in Brazil, to raise money in Brazil. Boeing, in these new Dreamliners. The parts come from 65 countries.
Absolutely.
Turkey is innovating in advanced composites. New patents coming out of
Nobody
Melbourne.
is saying,
So
if
the
you
money's
remember,
coming from
we
all
are
over the
all
place.
for global business. Nobody is saying that we shouldn't. Tara is not saying that. The issue is, should venture capital have a bit of venture or risk in it or not? If venture capitalists are supposed to be Wall Street private equity types, bankers or whatever that take little risk and spread their money and all of that, then let's be honest and not call it venture capital. Because yes, I agree with you, it's an industry that has been under pressure. It has been an industry that a lot of people who should not have been in venture capital entered it and thought that it was easy, because in the late 90s, you could do anything, call it stupid.com and take it public, and stupid people would line up to give you money and have some, I guess they felt some kinship to the name of your company. But I'm not joking. I mean, anything with .com, you would get people lined up to give you that. And everybody thought venture capital is easy. You go in there, you create something, no revenues, no profits, and you can become a venture capitalist. But it's not the case. It is something that it takes a lot of persistence, a lot of knowledge, a lot of hard work, amazing amount of work. A venture investor does not sit around and wear shorts and go to conferences and do the things that.
I want to be mindful of time here, but you know, the panel discussion here is around trends in global investing, and I think the overall theme here is that global investing follows innovation, and innovation happens in lots of ways. It happens in lots of layers and lots of stacks. It happens incrementally, and it happens in huge disruptive ways. There's lots of different ways to participate in that and make money. I want to thank all of you for participating today. It's been very helpful and valuable to me.
Thank you.